In 2023, I think we are going to continue in the same vein that we have seen throughout 2022, and that's very low sales volumes and declining prices. I can't see much change from what we've had over the past 13 months. In fact, it could potentially get a little bit worse before we hit rock bottom. So we're still not at rock bottom, and I think there's more price decline and pain to come. Ironically, with inflation, one would expect prices to be ramping upwards, but with the real estate market at the moment, it's the exact opposite, and we have rampant inflation but falling house prices. Until that inflation is nailed dead and that the Reserve Bank can stop it rising and in fact see it decline, they're going to have to keep interest rates high, which are going to kill the real estate market. Because one of the big problems at the moment is that as interest rates rise, people are coming off very low current fixed rates and they're going to see large increases in their repayments. So that's going to definitely hurt. That coupled with the squeeze on households with food prices so much higher, petrol high, everything's so expensive now. That's just squeezing the economy dead, and the real estate market is going with it. We have existing LVR, loan to value ratio rules, and CCCFA rules, which are hurting the market in a big way. They're making lending really difficult. Banks have been quite prudent anyway, which has been sound, but it does mean that people are struggling to get loans, and that in turn is hurting the real estate market. Yeah, there are some worldwide concerns. We've got the Ukraine war going on, which is keeping oil prices high. So petrol, there's no sign of that coming down. There's supply and logistics problems. We've got food disarray, really, in the supply of grain. China has been in lockdown for a very long time, so their production and export has been low. So throughout the world, those supply and logistics problems have been pushing inflationary pressures up, which in turn have been hurting us. So we've been importing some of that inflationary pressure from overseas through all these worldwide concerns. But a lot of it has been driven by the earlier government measures where they lowered interest rates to such a level and provided so much stimulus to the economy to get us through the pandemic that we're now really feeling the pain of that. Some near-term challenges which our economy may face will be potentially rising unemployment, and it could rise quite sharply. We've seen some of the big tech companies worldwide shedding thousands and thousands of staff. I doubt that'll correlate through to New Zealand, but there is a risk that unemployment could rise from its current very low levels, and that will definitely impact on the real estate market and the economy in general as we slip into recession. That is, if we do slip into recession. There are some silver linings. In fact, it's not all doom and gloom. We're expected to fall into recession at some point this year, and that would probably be in the first half of the year. But once we tip into that area, there's probably only one way, and that will be up or some improvement. So I think perhaps the second half of the year we could potentially see the market slowly responding. Interest rates should have peaked by then. There could potentially be some lowering of interest rates, which will help the real estate market. The unemployment rate is still really low, although it's possibly just starting to climb up. So there's good job security. There's been wage growth, which has been positive. China is finally coming out of their lockdown issues, and they're going to start exporting. Migration has ticked up quite rapidly. That's inward migration to New Zealand, which is a positive. Overseas students are starting to come back to the country. Other positives are the rural and agribusiness sectors are still in really good heart. So that will provide a bolster to the economy, and also the rural property market should actually remain in good heart because the rural sector is doing okay. And finally, the construction sector is also still in reasonable shape. Building consents are just coming off a peak. We're still doing over 50,000 consents in New Zealand. So there's still a very long tail to the construction boom, which is expected to see the construction sector remain in okay sort of shape for some time. It is an uncertain outlook because we've got such high inflation and rising interest rates that no one really knows if the Reserve Bank measures will knock inflation dead. So there is a risk that if inflation stays high or it rises even further, then they will have to raise interest rates even more. And so that is the big unknown. I think once we can see that inflation has peaked and starts to fall and interest rates will follow, then that should be the main silver lining, I think, for the economy. It's interesting that annual sales volumes now for the past year are at the lowest level since 1983, which is an incredibly low number, given that the housing stock in New Zealand has probably trebled at a guess since 1983, could even be more. And yet the sales volumes are only down at that remarkably low level. So what have these high interest rates done to the market? I've seen some fairly sad stories in the last 6 to 9 months where buyers who bought units or townhouses off plans, perhaps in 2021 or say 15 months ago, are now they're seeing their house completed and having to settle, and sadly those prices have dropped in many cases by at least $50,000, if not more, because of the price declines that we've seen. So how these people are finding the money to settle their purchases, I don't know. I've also seen some quite large declines in price in some developments that we've been valuing recently, where perhaps 6 or 8 months ago they were selling a house in a project for $1 million, and now that exact same house is trading at $900,000. So it's quite a substantial fall in the space of just 6 months. I think developers seem to be very keen to quit some of the housing that they're sitting on, and it's just opening up opportunities for buyers to buy at what appears to be quite a reasonable price given what was paid 6 or 9 months ago.